Shares of chip maker Advanced Micro Devices AMD are up $1.04, or 7%, at $15.15, retreating from the highest levels of last night's after-hours gains, after the company beat with its Q2 results and forecast this quarter higher as well, and raised its growth outlook for the year. Following the report, Chief Executive Lisa Su defended the value of her company's young product line against the empire of Intel's INTC dominance in PCs and data center. "There are no ratings changes today, that I can see, just some price target increases here and there. The bulls are delighted with the progress they see with new products such as Ryzen for PCs, and the beginning of revenue for the company's EPYC server chip. Bears confess being impressed, but mostly think the stock is overvalued." Even though the company delivered a profit surprise last night, there was some acknowledgement AMD's operating expenses are going higher, which bulls see as worth it. Hans Mosman with Rosenblatt Securities reiterates a buy rating, and raises his price target to $22 from $20, writing that "We are particularly intrigued about the incremental investment AMD is making in the data center in 1H17 and CPU-GPU compute, an area unique to AMD versus both Intel and Nvidia. We think we are in the early innings of an AMD x86 cycle," writes Mosesman, "that could be as big as the 2003-06 cycle that culminated with AMD capturing nearly 25% of all x86 unit CPU sales." Mosesman thinks the company is gaining share in graphics chips versus Nvidia and VDA, and he notes AMD itself is not banking on cryptocurrency, a reference to the fact some have presumed its strength comes from mining Ether and Bitcoin computing. And graphics sales were $659 million in the quarter, up 11% sequentially on both CPU and GPU strength. Momentum is set to continue for new CPU Ryzen as lower-end Ryzen 3, Ryzen Mobile, and gaming-centric Threadripper have yet to ship and will do so in 3Q17. In GPUs, we believe AMD gained share with the new Polaris mid to high-tier GPU, and will re-enter the high-end with Vega GPU in 3Q17 as well. The cryptocurrency segment of the GPU market is playing a role in GPU upside and is a dynamic to follow closely. However, AMD is making strides to make sure that GPUs that sell into those markets are not useful in gaming segments. Additionally, AMD is conservatively assuming crypto is not included as a driver for GPU growth in 4Q17 and beyond for their forecasting. Canaccord Genuity's Matthew Ramsey reiterates a buy rating, and a $20 price target, writing that the company's turnaround is gaining steam, even though he acknowledges operating expenses ramped sharply versus our expectation. The company's forecast for non-GAAP operating expenses this quarter was $400 million, notes Ramsey, above what he was modeling at $376 million, but we applaud the investment, even if it means near-term leverage is limited. Ramsey defends the company's issuing converts as a smart way to shore up the balance sheet. The impact of convertible debt shares added roughly 100 million shares to the forward diluted share count and served as a 3-cent headwind to 2017 EPS and a 4-cent impact to 2018 results. Despite this impact, we remind investors of the significant impact to quarterly interest expense, down roughly $105 million annually, the health of the balance sheet, and manufacturing flexibility the recent share count dilutive actions have given the company. Without these in aggregate, we believe AMD's turnaround would have proven